Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, March the 15th. The year's 2024. Let's talk trading. Weekly wrap-up with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. So, I hope, now that we've finished a couple of trading weeks in the month of March, that everybody out there has been employing risk management and not losing any more in any one single trade that they're willing to lose. So we'll take a quick look here at the weekly chart. We can see the dashboard tells us that the pound Canadian dollar did not fill the weekly gap, but the rest did. The pound is 107 pips below the weekly open high, 113 off the high and 19 off the low. And you can see that yesterday the pound broke out of the weekly opening range there at 127.94, so it didn't hold the 128.00 psychological line and fell all the way back down to the opening range of the year, and we're below that opening range high of 127.59. Actually, we're in the launch pad here. But since the daily candle is red, I usually don't expect price to launch like it does when the daily candle is green. Then if we take a look at the year, we are 27 pips above the yearly open. And looking at the month, we're 123 pips below the monthly open. 146 off the high, 148 off the low, 1 pip off of the midpoint. And we are still in the upper wick zone of the previous month. We had an inside bar 2 days ago. Yesterday we broke out of that on the downside and the upside, so we had an outside bar, and you can see it looks like we barely broke yesterday's low, but now we're bouncing back 17 pips off of today's low, 12 off of today's high, a 29 pip range, which is next to nothing. We've got 5 pairs over 100 pips. And I think something to note is that 2 days ago we had one of those very low range days, and then we had a big range day. So we went from inside bar to outside bar. I guess that was the news. And as far as the buy zone, you can see we've crisscrossed this daily open about 4 times. If you look at the M30 chart out of the last 6 candles, we actually hit the short zone, but not by much, or it broke out, but not by much. So you might be underwater if you had taken that short. And with 29 pips, the range is way too low for rat zone. Bambino Flex indicator said the short, price near pivot to be short. We haven't been close to the pivot. In fact, we've just been hanging out near the open. And so we've missed today's pivot, but we've taken out the week and we've taken out the monthly pivot. And just for grins, looking at H4, we've got a missed pivot up at 2787 and a missed pivot down at 2700 on the H4. So one of those 2 pivots will probably get taken out. In and out of the lower wick zone, the daily wick zone, and not by much. And looking at the weekly range here, smart ranges, we've got 132 pips for the week, which that's like, I think that must have been almost all of a day. See, yesterday we had 92 pip range. We haven't broken out of the high, we haven't broken out of the low, so far we've got an inside bar on the week. Looks like we're going to wind up with that. We had one 2 weeks ago also. So we did not break out there. High minus close 66 for the rats, and close minus low 17. For the weekly open crossover traders, 6 pips high minus open, but open minus low, we've got 126. So that weekly crossover looks like it definitely would have paid off. I don't remember what day. Where did that one happen? Oh, that would have been, looks like possibly yesterday. No. Looks like the 11th is when things fell down. Walmal, how you been trading this week?
It's been a mixed week. I mean, I'm profitable for the week. I've made gold, but it's been very difficult, to be honest with you. I think it's been difficult because the week was compressed in the beginning. So I was not willing to go and take as many trades, not willing to go and stay in as long to go and get more pips because of that, which is probably a good idea of trying to figure the week out. And then yesterday, we had a 92 pip range day, at least on my charts, 92 pip range day. But to be honest with you, it was an extremely difficult day to trade, at least for me with my broker, because I was sitting there almost all day, and I was sitting there with, normally my spread is somewhere between 3 points and 7 points, and it fluctuates between 3 and 7 points. And what happened was that yesterday, it was hard to find a point in time during the day when the spread was less than, 23 or 25 points, or in other words, 2.3 or 2.5 pips. I mean, just constant, huge spreads all day yesterday. And so it just became, with my method of trading, it just made it a very, very difficult. I'm not going to take a trade when I'm sitting there with a spread of that much, and I'm only looking to make that much. I'm not willing to take a trade. So did I make core yesterday? No, I didn't. I was able to get to maybe about half core and just quit, because it was just so difficult to trade today. And I think what was going on yesterday, my guess anyway, is we had the news come out yesterday, and to be honest with you, it was very, very mixed. Some of it was good, some of it was bad for the U.S. dollar. There was nothing, really that far out of what was expected. And the market was, and I said this the other day on the last time I was on the video, the market is compressed. It is very compressed. At some point, it wants to explode. And what I mean by explode, I don't know if it's going to explode up or explode down. I mean, I have no idea. But what I think what happened yesterday was you had a lot of traders that were sitting there with a lot of indecision, not knowing which way this thing was going to go and break out. And, it really didn't break out what it did. Yeah, obviously it had a good down day, meaning good for the U.S. dollar. But it spent as much of the day up at the top end of the candle as it did at the bottom end of the candle. It's just that, the first half of the day was up on the top end and the second half was down at the bottom end. And, it's one of those days where, the market couldn't figure out which way it wanted to go. And because of that, there was lots of indecision out there. And it became very, very, like I said, very, very difficult for me to go and trade that type of a market. And it's funny because here we are today where, I don't recall what you said, how many pip range you had for the day.
20, 29 on my charts.
Yeah, that's what I got too, is 29. And the reality is that I've made more than core today, and so it's kind of funny that on a day where we only got 29 pips, it was much easier to trade and get my core today than it was yesterday. I couldn't even make it yesterday, and sometimes that's the way it is. And, I think that, what was really happening was that move down in the afternoon, actually it would have been New York morning, late morning, but morning nonetheless. That was a technical move down. It was looking. What I think happened was the news came out. It was mixed. and the market was just looking, and I said this again, the other day on the videos, that this market, I think, is looking for a technical reason to move down. It moved up very, very quickly, and it needs to go and breathe and come back down. And what I think happened was it got up there, and it just sort of sit there. Oh, look, we got news that's not good or bad. Hey, that's a reason to go, and we just dropped. We just literally dropped the bucket, and everything just ran down.
Mm-hmm.
And we had 3 hours in a row where it just ran down solid, and I think that's kind of what happened there. And it's kind of funny how that can happen. There was no good reason for it to move up or down, but that's the reason why technical analysis can be so important, because it helps you with the idea of bias, and do I need bias in order to go and trade the way I trade? No, I don't. To be perfectly honest with you, I don't need to know the bias. So I don't need to have a bias in the market because as long as I keep my stops short, and because I'm only looking to get a few pips, I just go in, get what I need to get and get out, and go and minimize my losses when it goes against me. But if I do have a bias, what it may do is help me make decision. This is something that I've been trying to add to my trading style a little bit, and that is that, hey, if I do have a bias in a particular direction because either technical or news that came out, whatever it may be, maybe that can help me out a little bit, because those ones where it's I don't need to go into that trade. I can go and hold off on getting into that trade, or knowing if you're going to go into that trade, get in that trade and immediately get out. Just as you like to go and say on some of the things that you pointed out in the past, just treat the trade as a smash and grab. In, grab a pip or two, out. And just know that that's the way you're going to go and handle that type of a trade. So, and then the news that came out at 8:30 this morning, what was interesting about it was that it was absolutely catastrophically horrible news for the U.S. dollar. It was the Empire State Manufacturing Index, and they were expecting a decrease of 7.0, and they got and the number they got was minus 20.9. Absolutely horrific. And here we moved from it, from that number. Did that number cause any movement in the market? Well, let's just put it this way. It ran maybe 5. Interestingly, the number came out, and immediately it jumped up like about 7 or 10 pips, if I don't recall exactly. But somewhere around 7 to 10 pips, it jumped up, and then turned around, and then ran down like 15 pips, but at the same time, it's right back to where that number was when we're literally right back at where it was when the news came out. So it's kind of interesting how the news, it's very odd how it's affecting the market. It's affecting the market very, very short term for a very, very quick, hit. And, we'll have to go and see, I think market sentiment is driving this market more than anything else. The technicals are driving it, and sentiment are driving it, not necessarily the news.
Yes, I think the main thing, the lesson to be learned from what you told us about this week, or especially the past 2 days, is that you have to be aware of market conditions and trade accordingly. Because, like you said, on a big range day, you didn't make core. On a small range day, you made core. So, obviously, it's not just the range. It's, it's like, how does it get there? Are the conditions right? You said, hey, your spread was too big. So, you had the awareness to say, you know what, this is not working for me, so I'm going to take, my half core, whatever, go home and come live the fight another day. So, fellow traders, just remember, when you come back to your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.